Good morning, everybody. This is Joe Cusick, Vice President of Wealth and Asset Management from Money Block and Trading Block with your Traders Exclusive this Friday. What a week. Looks like volatility is back on the plate. We see that the markets have been all over the place. So we want to put some context after we see the moves that we've seen this week. And there are a few things that you want to note overall. First, we saw that stocks became very oversold after sharp declines, basically from August 18th until the 24th, those last 5 trading days. Second, these declines were broad-based, and they triggered some significant support breaks on major indices like the S&P, the NASDAQ, and the Russell 2000. Third, you're seeing some technical formations. One of the most notable one that technicians have been bringing into play with those 3 large cap indices and the small cap indices is that we've seen some spinning top candles that have been formed with high volume. All right, and we saw those on Monday, and that might argue for some sort of support level on those Monday lows. The high volume does suggest that weak hands have been washed out of this particular market right now, and there represents some sort of selling climax. We want to keep an eye on that, especially with the action that we're seeing today with both the S&P, the NASDAQ down today, as well as the Russell, and we've seen that volatility has been holding that bid. Fourth, stocks. They did an old pop and drop on Tuesday. That was a really interesting action. Traders have been loving it. Investors, this has been having you pulling out your hair. But then it popped and then closed strong on Wednesday. This means, and with the action yesterday, with it actually pulling back on the close after we saw what looked to be a sustainable rally, this means that we're in the midst of what looks like an oversold bounce that's looking like it could potentially fail, but it's within a bigger downtrend, and that's the action that we're seeing at the close of yesterday on Thursday and this morning on Friday. The resistance zones that you want to keep an eye on. We're going to keep an eye on in the NASDAQ. We'll take a look at the Qs, the ETF QQQ. Watch 106 as the first resistance point and 110. If the bulls are going to start getting traction in tech, that's an area. As a matter of fact, we saw some bearish activity in Intel this morning on some puts being purchased, but we also did see Micron. We saw some October in the money call options being purchased there in front of their earnings, which is in that October expiration cycle. So we're seeing a mixed bag there. In the S&Ps, we're going to take a look at the spider. Look at the first initial resistance points of 203, 204 area. If it can retrace that, which would actually be a 62% retracement of the pullback that we've seen this week, then you want to look at that 211 on the spiders as that primary resistance where the bulls will have taken control. Finally, taking a look at the small caps, we're going to look at IWM. If you can see that it can break that 120, 122 level, again, a 62% retracement from the lows that we saw on Monday. And then you see a 124 break. Again, the bulls are going to get into get the momentum to their upside. Speaking of momentum and relative strength, keep an eye on the RSI areas on these particular broad-based indices. If the RSIs continue to stay in that 10 to 60 range, we're going to see that downtrend is going to still have some strength, and we're going to have to keep an eye on that, especially going into the close today and the beginning of next week, because that's going to be the end of August on Monday, and we're going to be getting into that September action where we're going to see what the Fed's going to potentially do. Well, this is Joe Cusick, Vice President of Wealth and Asset Management from MoneyBlock.com with your Traders Exclusive this Friday. Have a great rest of the trading day and a great weekend. Take care.